With the national debt set at just over $1 trillion and a government that continually increases spending, there is clearly a gap between financing the American lifestyle and actually paying for it. Fiscal responsibility needs to be instilled in American citizens, and personal finance classes need to be mandatory for every high school-age student. The standard for financial success has been diluted by social expectations and a lack of understanding on how to manage money and what it means to create wealth. According to a 2017 study by the Federal Reserve, U.S. households collectively have more than $1 trillion in credit card debt. Most people consider making their payment each month and on time to be the hallmark of responsibility. But Investopedia states that responsible use of a credit card means paying off the balance on your account in full each month. Not just the statement balance, but the entire balance of your credit card. This is a painful fact that most people don't get. Some of this is a lack of understanding of revolving credit and the true cost of credit cards, but part of it is due to irresponsibility. A good portion of it is due to ignorance. For instance, a high school graduate who turns 18 and is suddenly eligible for a credit card with a $5,000 limit and a 15% interest rate won't want to miss out on the trip to Europe that all their friends are taking just because they don't have the cash in their bank account. If this trip costs them $4,700, then the student comes back, they won't magically have that balance available to pay it off. They will start making minimum payments, and their credit card company will let them. And in fact, it will encourage them to continue doing so. At $189 a month, it will take an 18-year-old fresh out of high school 10 years to pay off their trip to Europe, to the total tune of $18,155. Educational institutions owe it to their students and to the American Commonwealth to graduate students with the ability to make financial decisions on their own that will not land them in crippling debt. However, in terms of financial literacy, the U.S. population is ranked 14th. In a 2015 global study conducted by the Standard & Poor's Ratings Group, the U.S. has a financial literacy rate of 57%. That's failing. High schools are churning out students who have spent 4 years studying history, science, or in our case, Alaska studies, but can't write a check or compromise how much they're going to pay in interest on a 30-year mortgage. It's not to say that biology is not important, but every student pursues that. For every student that pursues that as a career, 100% of the other students are required to make financial decisions throughout their lives. All these decisions have an impact on their future and the economic burden that they may place on their country. In fact, the National Financial Capability Study says more than half of millennials take on student loans without even attempting to calculate what their payments will be. If high school graduates can't think 4 years in the future when their loans are in default, how will they think about retirement or risk diversification? A good personal finance curriculum would help usher high school students into adulthood correctly and hopefully into a future of good spending decisions. Young adults who are saddled with debt do not make purchases, and a generation that's crushed under their debts creates a stagnant economy or just more debt. Dr. Lusardi with George Washington University School of Business put it best when she said, "One of the basic lessons in personal finance is that the time is money. But time is starting to run out. Young people are already behind the steering wheel of their financial decision making, and it's time we step in to make sure they know how to navigate the highway ahead."